Hey everybody, welcome back to Money Vikings, and I wanted to do a special on the top 5 takeaways from this year's Berkshire Hathaway 2023 Annual Shareholders Festival, which I have a great time watching it vicariously. I've never gone. I wish I had. I am definitely a Berkshire shareholder. Get the old book here when they used to send it. But I definitely like to hang on the words of Buffett and Munger. Now, what's different about this video is that I want to go into the things that are important to us as investors. You might want to check it out. They say a lot of interesting things about the world and artificial intelligence and China versus, the U.S. and all that kind of stuff. But, at the end of the day, a lot of that stuff is so out there. It's as individuals, it's not in our control. So what I like to focus on is what can we think about to hone our mind as investors. So here's the one that I want to talk about first. So as a holder of Berkshire Hathaway stock, and it's done really well over the years, Munger had simple advice when it comes to Berkshire Hathaway in an estate or hold it. He didn't mince any words. He said, well, at Berkshire, we have a simple problem of estate planning. Just hold the you-know-what stock, okay? Use an expletive here. That's pretty simple and straightforward, and I personally couldn't agree more. I think it's a great long-term play, so I'm definitely going to hold it. Buffett said investors don't need to be experts in technical aspects of businesses if they can understand fundamentals and commit to always learning. So he used the Apple example. I mean, I don't think a lot of us know how, honestly, how this really works, right? It's just an amazing technology. There's definitely geniuses out there that know how it works. But at the end of the day, I don't need to know how this works to be a shareholder and to profit off of the long-term prospects of it. So I thought that was a really good second point for us as investors. This is an interesting one. More people do dumb things. So Munger said value investors should be prepared to get smaller returns as competition intensifies. But Buffett said there's still opportunities given so many people have a short-term view and often do stupid things in a panic. This is another one that I could not agree more on. So we'll see in the next month or months that the market will have a lot of anxiety over the debt ceiling debate, and people will probably be doing dumb things. They might freak out and sell everything in their 401k, but that's probably not a good long-term play. At the end of the day, these things do get worked out, and the value of assets do go up as economies grow. Okay, so that's that one. They called it diversification instead of diversification. So I had a little bit of consternation with this one, but I see where they're coming from. So Munger said it's insane to teach that one has to diversify when investing in common stocks. Okay, I get the idea. None of us can really diversify properly, I guess, unless you're owning like tons of like 2 shares each of a company. But I still believe broadly in the concept of diversification in terms of assets and different asset classes. But this is what he's saying, and I wanted to put it out there. So one of the insane things that's taught in modern university education is that a vast diversification is absolutely mandatory in investing in common stocks. So see, he's focusing in on diversifying in common stocks. So for them, they're trying to pick the best companies, which makes a lot of sense. So if you take the Apple example, if they saw a bunch of tech companies, but then they determined that Apple is the best one in their view from looking at the fundamentals and understanding consumer behavior and looking at the product and all that, it would make no sense for them to put money, to dilute their capital and put their money into, the 4 other competitors when they see that Apple is the one, right? So I think that's really what they're saying, but, take it for what it is. Making peace with investments that go bad. So we had as much fun out of deals that didn't work as the ones that did work. If you knew you were going to play golf and you were going to hit a hole-in-one every hole, nobody would play. Part of the fun of the game is the fact that you hit them into the woods, and sometimes you get them out and sometimes you don't. Yeah, that's typical Buffett advice about the realities of life. So we talk about this sometimes. Life is not a success-only journey. There's challenges along the way. Maybe that is what keeps us coming back for more and keeps it so interesting. If we were the best at everything and succeeded and everything was easy, I guess maybe it'd be like, what's the point? We're all Tiger Woods. Cool. It's not special anymore. So yeah, it's kind of interesting. It's kind of a psychological thing. I think the underlying point, though, is important to make peace with the mistakes you made in the past when in terms of investing. We just have to move forward and keep trying to find the best investment vehicles that we can. Number 5, on the perception of dwindling opportunities. New things coming along don't take away the opportunities. What gives you opportunities is other people doing dumb things. In the 58 years we've been running Berkshire, I'd say there's been a great increase in the number of people doing dumb things, and they do dumb things. And the reason they do it, to some extent, is because they can get money from other people so much easier than when we started. So another interesting one. They're basically saying, new things don't, always equate to the opportunities. But again, in a market sense, we're talking about investing. The market's going down when, it's a voting machine. People are voting against certain assets. But sometimes it just doesn't make a lot of sense if the fundamentals are there and the company has long-term growth prospects. So those are my top 5. There's other amazing quotes. Go check them out. But it looked like a really great event. And those were the top that I took away that I thought could really help us all as investors. So hope you enjoy this. Please like, subscribe, all that stuff, and see you later. Thanks.